guys, Cam McLellan.
How Lewison?
Welcome to today's Wealth WOD. We're going through market area property. We're coming to talk about market and how to knock out capital city markets that are not good for investment at that point in time.
Key piece being, we talked about it last time, we wanted to find a way to consistently find a property each and every time that will be the right property for us. Not some random guess, one's good, one's bad, always the right property.
Like capital city markets, and as Al puts it, in the way of a Jellybean analogy. If you think of, say for example, there's a massive jar of jelly beans, and they're all red jelly beans, and somewhere in there's a black one, and the black one is the perfect jelly bean. But to dig through it, just putting your hand in the jar and pulling out jelly beans is a very small chance of finding the right jelly bean. But if you laid them all out across a table, you could easily find that single one that you're after.
Push the red ones away that aren't the right one. Push them away, push them away, push them away.
Process of
You're
elimination.
left with one in the middle.
Correct. So that's what we're doing with this process. So if I look at market, and we think of markets in Melbourne, Sydney, Perth and Brisbane, the reason we focus on those capital city markets, there's more than enough property for my lifetime, my kids' lifetime. The other good thing about these capital city markets is what drives property. So we've got an urban growth boundary, which separates regional from urban, and then high density from low density.
And supply and demand drives the property market, and the urban growth boundary contains the supply of property. You can't sprawl it out forever. It's held within these boundaries. Correct. And there's limited supply of property within that boundary.
Correct. And the good thing is with the government, because the ageing population, baby boomers leaving, and the decreasing amount of tax, the government can't pay for infrastructure to go further out, which is why they're making more density within our cities. So it puts that cap on the amount of land. Look, let's go through. In the book there, I've got a check sheet. It goes into a lot more detail, but really high level. What we're looking for is double-digit population growth. If we've got double-digit population growth, the market's getting to a peak, and what we want to do is stay away from markets that are in a boom at that point in time, because they've already had the price increase.
So consecutive years of double-digit growth, we start to rule them out.
Yeah, that's right. So the other couple of things, population growth forecast, Australian Bureau of Statistics. If you look at, it's a terrible website to get around, but have a look at that one, population growth statistics. If you look in there, over 2% per annum minimally. Once again, we're not looking for the best population growth forecast, we're just looking to knock out ones that haven't got it. So Adelaide and Darwin and Hobart, those sort of population growth forecasts. Unemployment rate, we want to make sure when people have jobs, they're confident and they buy houses. And then we want to understand the stage of the market cycle. So if we use the French guy, Warren Buffett, arguably the world's best investor, Warren Buffett, be fearful when others are greedy and greedy when others are fearful. So we teach our clients to buy counter-cyclical. So before the market goes up, we start to buy. When the market's in a peak, we take our money out, we move to another capital city. So grab a copy of the book, have a look at the check sheets in the back, guys. It goes into showing you exactly how to pick the right market, but spread the jelly beans out.
And you're going to you'll ideally find there's multiple markets that are right for you, but hey, you've ruled some out. It's not a lottery. You're finding ones that work. You might have down to 3 you're going to play with. We'll talk about area next time.
Greg, we'll come back in the area very shortly. Cheers, guys.